first topic we're going to be looking at is senior housing and healthcare. And delighted here to welcome Ron as well as Sylvia from the Senior Housing and Healthcare Association. And it's going to be a really super update on what's happening in the market and some of the key trends driving that. So I will hand over first to Ron. Thanks very much, Ron.
Yes, thank you very much. Also, a warm welcome from my side. My name is Raoul van Blois. I'm the co-founder and the chair of the Senior Housing and Healthcare Association. And we founded it already almost 5 years ago. And I think it's a lovely journey because we created with the thought let's say, multi-stakeholder platform where we combine perspectives from operators, investors, developers, policymakers. And it started with a pan-European scope, but I think roughly 1-2 years ago already have our first US member, also Scott, is today all the way from the US. Welcome, Scott. And I think we have a very interesting panel discussion, Sylvia. So maybe also a little intro from your side.
Yes, hello, good morning. I would like to encourage everyone to come closer to us because I can see some of the members or friends of our association. So please, still there is a room in front. So I think that will give you a better quality of watching and listening what we are planning to, what we prepared for you. Exactly today, our regular EXPO Real panels, to introduce this interesting and engaging sector, senior living and healthcare market, to the wider group of the investors, because this is what we are aiming for, to convince everyone that due to the demographics, our asset class is actually gaining a momentum, and it's really important for all the investors to understand that there is a lot behind the senior living and healthcare, and it's properly to understand the market. Together with our fantastic speakers, we'll try to explain it. And of course, the launch of our reports. Some of you already have it in your hands. So this is our annual publication, Senior Housing Healthcare Report. This one actually summarizes our summit that we did in Brussels in June, together with our members, because we always emphasize that our association is driven by members and for members. Well, and I think that, we have so intense program today that I think we'll leave the floor to our fantastic speakers. But of course, we encourage everyone to join us in this interesting journey. I think the journey that is not only about the growing asset class, but also about the understanding and changing the narrative around the asset class. I would say that maybe the main key message from the summit we held in Brussels was that actually we are talking more about changing the shifting from aging population to longevity population. And I would like to strongly convince you that our asset class is not about the number of beds, but it's about the quality of life, not only older adult, but as a society as a whole. So I think that together we're going to explain this, but also, together with our lovely members that the group is growing and growing, so we encourage everyone to join us, and we, together with Ron, will be present here for the 3 days of Expo. So just join us and let's talk about what we can do together.
Yeah, we also have a little announcement, because in terms of collaborations, SHHA is very, let's say, like-minded in terms of that we try to collect people who have the same DNA. And I'm also very humbled to present that we just signed a collaboration agreement with the National Innovation Center of Aging. I think Nick gave a keynote at our summit, and that was an inspirational summit where he delved into the longevity economy. And that's also one thing where we will take some global initiatives on. So I'm very keen on this collaboration. But let's go to the panel, and I would like to invite all the speakers on stage.
So warm welcome, quick introduction from our side, starting with Raoul Thomassen from Aedifica, CEO from Aedifica, Yeliz Bicici from COO from Cofinimmo, so very active players in the field of senior housing and healthcare, with a very broad portfolio around Europe. Nikolai Schmidt from Swiss Asset Life Managers, taking care of a healthcare portfolio. Alexander Fröse from DLA Living, actually managing director and founder, also with the funds investing in senior living, especially in Germany. And Stefan, partner at CMS, a person who is supporting us with all the legal and regulatory frameworks, and also ESG topic that is very interesting and important, not only for the active players, but also we hope that for the investors. But starting maybe for the broad question, because hopefully we managed to attract to this session not only the people who are already active in the field of senior living and healthcare, but also those who are thinking about maybe the diversification of their portfolio. So maybe let's imagine that in the room we have a broad spectrum of investors looking at their portfolio and thinking where to put their money in. And maybe the first round of the question will be, what arguments are the most, you talk to many investors, yes, institutional investors, different type of investors. What attracts, and do you actually see this growing interest from investors into this asset class? So maybe starting with Raoul.
Okay. Yes, thank you. So I think the number one factor for this sector, it's been mentioned many times, is demography, right? So a lot of baby boomers are now slowly coming into that age where we see again an uptick in demand. And that demand is also filtering through in the care sector. In almost all the countries that we are active in, you see waiting lists are building. So the demography is the number one factor, I would say. Yeah.
Yeah, but there are always the drivers, but there are always the hurdles, and there are maybe some, other things maybe don't attract investors that quickly. I mean, of course, we would expect.
There are many more factors, but I don't want to steal all the thunder from my other panelists.
Okay, Yeliz,
but
we know the demographics. We know we are always emphasizing that in this not stable times in terms of macroeconomics and geopolitics, one thing that we can be sure of is that we are not going to reverse the demographics. And even if you talk to the experts in demographics, they always emphasize that actually it's not now the discussion about how to bring back the fertility rate. It's not possible. It's more about quality.
If you mention not stable, what the sector offers is really stable cash flows, long-term leases. So that's something that's paramount for the sector where a lot of investors are looking at. Yeah.
Yeliz, and when you talk to the investors, what are their questions and what are their doubts, or maybe what are the encouragements for them?
Well, I fully agree with Raoul, and in a way, it's a sector where we can have solid returns today, and given the demographic fact, there is a positive outlook for the future. But I think from an investor point of view, you can also look at it as a social investment. Needless to say that investing in healthcare facilities has a social impact as well. And I think also that this keeps the investor actually up his feet, because obviously it's a sector where lots of things are going perhaps to change, home care, what is the future of care, what is the impact of that digital caretaking, and so on and so on. And this is exactly the field of the investor. And last but not least, it's a global investment case as well, right? So when we look at what happened the last few years, offices, hotels, retail were a lot of bashing on that. But I think healthcare, regardless of the challenges that it could have, one conclusion is that it's a sustainable asset class, global asset class for the future.
Okay, now passing to Nick, to you. You are always much more business-oriented. So from the business perspective, ESG is one thing, and we're going to explore it in a moment. But from your perspective, looking at the yields, looking at the interest rate, how would you define where we are and whether this is the moment? We, of course, know that we observed a decline in investment in the last 5 years, not only in this asset class, in general real estate market. So where we are now?
Right now, we are in a phase of consolidation, and we try to find a new equilibrium for yields and prices. We are on a good way, but we are not done yet because project developments are still too expensive for us as institutional investors. To be honest, until 2022, the yields were decreasing and decreasing. Prices were rising and rising, and almost nobody took into account the potential operator's risk. And that in the last 2 years became totally different. Some operators filed for insolvency, and we were aware that you have to dive very deep into the market and its specifics to be successful, and to distinguish between good and bad quality of operations, locations, demanding situation, etc.
maybe let's stop here for a moment, because I think that it's also very important to understand that this asset class, if you would compare it to others, especially with this operational component, is really important to understand. So maybe let's elaborate on this a little bit, because I think maybe what should investors who are looking into this asset class acknowledge when they are actually thinking about investing the money?
I think the biggest difference, and that's what investors do acknowledge very much, are the stable income and long lease terms. And when you're a good asset manager, you are also capable of handling this potential operator's risk, to be honest, and then you can also mitigate that. But the two major things are the stable income and the long lease terms with the operators.
Okay, now passing to you, Alexandra. I know that, of course, you invest in this part that is senior living, so maybe it's also a good moment to actually show that and present that actually our asset class is quite broad spectrum, yes, starting from senior living, so independent living, going through assisted living, care homes. So what's behind your strategy in terms of investing in this part of the market?
So good morning, everyone, first of all. What we do is, besides the demographic trend, I think what's not known to everyone, or if you're not that much into the market, if you look at the top 5 senior living operators, you have a market share of less than 10% of all available private beds. So what we see is it's a typical play for actually consolidating this fragmented market that you have, especially in the German spectrum. You will not have this, as Nico just said, probably in the next 5 to 10 years. But for now, it's a typical play because the prices, the valuation decreased. It's a great entry that you have here, not that high entry barriers. Plus, the situation that you have, this fragmentation, gives lots of room for consolidation. And we as senior living, let's say care homes and assisted living facilities, our core focus. We partner up with leading senior living operators to consolidate this fragmented market. So actually it's a good risk-return profile for the investors, plus you give actually back to the society, because we have seen, and as someone just mentioned, lots of insolvencies, no one was looking at or controlling, monitoring the operator. If you partner up with those leading senior living operators, even though you're just the asset owner, you really try to understand what is the operator doing, who's the management, what's the vision for that operating company, etc. And once you consolidate this and the market bounces back in the next 5 to 7 years, you'll probably be there with a stabilized portfolio, long walled, and there's lots of different exit options then. That's what we do.
Okay, we'll get back to this in a moment, but I think also, Stefan, maybe in this first row of question, a question to you. How would you say, from your perspective, where we are in with the market, and also how the regulatory framework impacts the development?
From my experience at the moment, the market is getting better. So I think we suffered a very tough time. So the last 2 to 3 years, in particular, when you take a look at the not the senior housing market, but the nursing home market, because there were some insolvencies of operating groups, and that was a very tough time for investors. But I think it's increasing at the moment, and a big advantage of the healthcare market and senior housing market in general is that it's very fragmented. So there are lots of possibilities to buy properties which are not on the focus of all the major players. And that you mentioned it before, it's not only nursing homes and senior living and assisted living, ambient assisted living, but it's also hospitals, care clinics, or inpatient clinics. So it's a very interesting market, highly regulated. So you have some kind of security what the regulatory framework is concerned. So I think, given the demographic situation, it's very sure that it will become better in the future.
Looking at the investors again, do you see? I mean, of course, the fundamentals of the asset class are clear, but there are probably something that pulls them a little bit away. And if they look on the logistics, on living, residential in general asset classes, maybe they have something easier to pick up. So of course, this asset class is a little bit more complicated. So how to address this? I mean, of course, reputational risk was something we've been discussing 2 years ago. So whether it's more connected to the fact that, for example, investors like you, who have this, very strong ESG portfolio, they show and they prove that actually, you can do it in a way that, it's managed in terms of the governance, on the social impact. And actually, maybe this consolidation is actually a great opportunity for all the investors, because those that goes in line with the CSRD directive actually guarantee a high quality of what we need at the market. Raoul.
So how to address this uncertainty with investors? I think Alexander mentioned it. It will mostly be what is the transparency that we can bring together with the operators about how the business is doing, how the care homes are actually reaching a higher level of occupancy, and then showing also good margins. Margins are coming back, but this is not going as fast as the occupancy rates. But especially on the transparency side, this will give more confidence to the market, which is also in our portfolio quite visible in the UK, where there is that transparency and where operators are doing better than even before COVID in terms of margins. Yeah? So that confidence, to give that back to the market, will require more transparency. We need to work on that. That's clear. You mentioned ESG. Of course, ESG will be a factor for investors to step into this sector. Although I'm not sure at the moment that this is really on the top of their list, but it will definitely be an argument, yes.
Yeliz, following, the social impact.
Yeah. I just, if I may, want to continue on some of the comments that were done before. Obviously, yes, the investor, with the insolvencies and so on, we are much more careful and look into the sustainability of the rent and actually really, let me say, request to have the necessary information to, get an opinion on that. Having said that, the investor remains the investor, and it's the operational side, obviously, that needs to, continue doing the business. And I think, in a way, consolidation is a good answer into making the market more professional and so on. Having said that, again, it's always, I like the word equilibrium. It's always a matter of balancing things out, because you don't want to have a portfolio with only one operator either. So I think, there's no easy answer, but it is for sure that, we are much more careful on sustainability of rents and business models, and request information to be able to monitor it during the leases. Again, but it's the operational side that remains operational. Just to answer on your question, why is it I wouldn't say more attractive, but as attractive as logistics and other sectors? I think globally it is accepted that this is a business case, if I may call it like that, that will remain a fairly valid business case for the next 30, 40, 50 years. Nobody can say that of the offices. Nobody can say that on logistics or hotels and so on. We can say that on the residential market as well. So in a way, ESG is perhaps also something you can do. Not perhaps, you can do ESG in other sectors as well. But here, fundamentally, the business case is a very sustainable and solid future-proof business case. And I think that is the most attractive element for the sector.
So Nikolai, looking at a glass half full, so what would be the key lessons learned from these 2 past years in terms of your cooperation with your shareholders, with operators, with your business partners?
Yeah, the lessons learned from the last 2 years. You have to be very picky when it comes to new investments, not only in terms of sustainability, but also when you have a deep assessment of your operators, not only the financial figures, but also about the management, the strategy, etc. If they also do project developments, not only focusing on their operating business, sometimes that's now a good combination, to be honest. There are really ways to cope with this situation, and I think we are able to find other third-party operators for some good locations. But it's in every case it's really it's a tricky thing, because the operators, third-party operators, they know that they are in a good negotiation position, to be honest. So we have to negotiate a lot and to give them a lot of cash and rent-free periods, etc. So yeah, that's what we learned, and it's a long way to find the third-party operator and to bind them.
Maybe one question from my side. When you look at your diversification strategy and also geographically, what's the key takeaway on that one? We had a SHHA in-depth briefing last week on the Nordics. I think we had 200 registrations. It was enormous. So the appetite to go to different geographies is there. Maybe also for all the investors, like, what's your take on that one? Is it viable to have multiple European markets, or are you also, let's say, expanding to emerging markets like Poland? Can you openly share some insights about that one? Maybe first start with you, Nico.
So until now we are focusing on France and Germany as they are the biggest markets, to be honest. So we want to grow more and more, and I think there are the most big opportunities, big portfolios. But so we are also stepping into other markets like the UK. We did transactions, and also the Nordics. We also focus on that, but not in an extensive way so far. But we are open to it. So.
And why not extensive?
I think it's a more internal thing, because we have to grow in these markets also with our company, with our staff, etc. But there are no
other. Like the real story at the end. So
come on, Nikolai.
No, I know about the high yields, especially in Finland or Sweden. But to be honest, you have to be deep into the markets to understand. So it's not only you can't manage or invest from I don't know, from Paris or from. No, you have to step into the market, you have to be there, you have to have colleagues there who investigate the market, who are in the market, and have their relations, and that's also what we learned in Germany. So you have to be very deep into it.
And what about you, Yeliz? Because when you look at Cofinimmo, your portfolio is diversified over asset classes, from medical cure till long-term care. And geographically also quite big spread. What's your key take on that one? Is it attractive to have a diversified portfolio, or is it also difficult because it's quite knowledge intensive?
Well, nothing's easy in life, right? So yes, it is quite attractive with its difficulties or barriers that you can cross. Obviously, I think we're similar with Raoul in this case. However, I do agree. You need to know legislation. You need to know, you need to have networking. You need to know all the ins and outs of a country before investing. And I mean, look at Germany with all the Bundesländer. It's still a mystery sometimes to me. So that's for sure. I think we say it ourselves. We're a pan-European investor. So potentially every European country is a possibility. Having said that, the last few years, given the challenges on an operational side, the macroeconomic side, geopolitical side, and all the rest that we had, we really focused on our current portfolio because we need to keep value for the shareholder, and we cannot neglect then and expand in various countries with the risks that are attached to it. But who knows in the future?
And for you, Raoul, is it the same story, or because you quite recently did a big acquisition again in the UK market? I think you're quite active in that one.
Yeah.
Can you share some insights about that?
In general, I would say it's very similar, and indeed, geographical spread helps to diversify as we want to diversify our tenant base, asset classes. This has proven a good strategy overall. I mean, what's against going into multiple countries? Yeliz said it, you have the regulatory framework. There is also always an economic model behind it. How much support do residents get from the state? And those two factors are also a reason why you would or would not get into the next emerging market, right? Because again, that's a barrier you need to overcome, and how reliable is that system or that government behind it? So we are really looking to at least grow in those markets where we are active, and then it helps indeed to be diversified, because we've seen that maybe in Germany we cannot develop at the moment with the current interest rate climate and the cost of construction. But in other markets, or there will be opportunities like we have recently seen in the UK. Opportunities because maybe there are developers that need to offload, so there is some level of distress there. But also opportunities because there the care rates, the fees that the operators can receive are now at a point where you could actually again step into the market. Yeah.
Yeah, so Stefan, sounds like magic to your ears, isn't it? When it's about legal and all. Are we also heading to more European legal framework? Because I think that you did quite in-depth research in all the geographies, like what's the status on long-term care and legislation. Or is also the European Commission working on a social strategy, or what's your view on that one?
I think we have only 5 to 10 minutes left, so I don't want to bore you. No, it's the problem with the European legislation is that many law is made by directives, so the directives have to be transported or translated into the local or the laws of the federal states of the countries of the European Union. So that leads to the consequence that there are sometimes differences. So you cannot compare. You can be quite sure that the law is not the same in any European country. So you always have to differentiate, and some countries are more active and are more trying to stipulate everything in detail. Others leave more space for the operators and for the owners to have some kind of a negotiation. What is the right concept, in particular to energy savings or the ESG regulation in general. So it's very difficult to predict what the European Commission will do in the future. My feeling is that they will step back a bit, because if you take a look at the elections in the European countries, it seems that the people in Europe are a bit fed up with too much regulation in every detail. They want to have some kind of a framework, and then the details can be decided by the market players. But that's only a feeling I have. I'm not sure whether the European Commission will have the courage to do this.
Just to say that exactly, we are at the point where European Commission announced almost 3 years ago its European care strategy, EU care strategy. And we know that by June this year, all the member states were supposed to present their approach to long-term care, but we don't know which countries actually answered that. So we are monitoring it, so we'll see what comes out of it. Of course, for the investors, the policy makers, in terms of stable environment in this regard, is probably very interesting, and also will give some maybe additional boost for the investors. But also, Alexander, looking again to your fund, and actually maybe coming back a little bit to the product you are serving, I think it a little bit also reflects all the trends that we are talking about, yes? Because normally when you sit down and start to talk about senior living and this asset class, people have in mind nursing homes. And of course, your product shows that actually you have a little bit different approach to what you are offering. It's actually a little bit more diverse target audience that people may expect. So can we a little bit tackle also who you keep in mind in your strategy, who you address the product to, and how do you see the future development in this regard?
All right, so I understood this is now the 5 minutes pitch I have.
The 1 minute pitch.
So pretty simple. What we do is, so we've been in this market for more than 10 years. We don't do any developments, saying this up front, because we didn't want to face any development risk, which we've seen in the past and because of interest rates rising, etc. So what we do is, if you look just at the operating side, and we forget about for a second that we are a real estate investor, the top 5 senior living operators in Germany have a market share of less than 10%. So what we did is, we did a 12 months interview marathon trying to understand what is your mid-long-term goal in the next 12, 18 or months or 5 years. And then we form partnerships. So for us, this is not a typical tenant. For us, this is a partner. Because there are operators who are saying, look, we don't like the eastern part of Germany. I will not comment why, etc. Okay? There are senior living operators saying, we love the eastern part. Some only want to go to south of Germany. Some only want to go to north of Germany, etc. But they do say, hey, Alex, we would like to consolidate this fragmented market, make it more professional, etc., with working staff, etc. But we are asset light. We don't own most of them. We don't own our own real estate. So we are looking for a consolidation partner on the real estate side. And we like to be this kind of partner, because where this fragmentation is coming from is that there's so many in the UK, they call it mom and pop shop. So 2 doctors started an asset, bought an asset, started in senior living operating, coming to a specific age, saying, look, what are we going to do with this? Because it's a great senior living operator, it's a great asset, lots of trained staff, but we can't sell this off. And then we're stepping into place with one of the senior living operators, because this is maybe matching a specific cluster on the tenant side, acquiring with our fund the asset, having a blueprint how a sustainable rent and a sustainable lease agreement looks, they taking over the opco, and with closing you already formed actually value. Because then it's not a mom and pop shop, because you reposition the asset day one, and then you actually have a real fair market value uplift, because then it's not a, as I said, single opco, but it's maybe below a 450 million euro senior living operator revenue company. That's what we do, and that's what we like. And as I said before, there's so much room to actually, again, consolidate this fragmented market in the next 10 years. It won't be there in the next 10 years. Mark my words.
Love it. Yeah, that's what we like. We like thought leadership. The problem with this type of panels, and that's always with SHHA, when we're running a summit of 1 day, we want to have 2 days. When we have a session of 30 minutes, we want to have 2 hours. And we still have a second part of this panel with our overseas expert, Scott Eckstein. But I want to finalize with a final question for the investors, because we're also searching for, let's say, the game changer. And I do believe that social impact, Yeliz was already highlighting this one, that could be the game changer. But do you also see it reflected already in the valuation of your product? And that's not an easy question, but it's the final question. So I'm very curious to hear, maybe first start with you, Yeliz. What's your take on the valuation side? Is it already reflected, or?
Well, yes and no. So
let's start with the no.
No, because I fully agree with what was said. It is quite fragmented. It is unclear in terms of objectives and whether you could get there. And I think we all need to be very pragmatic into, an approach to this. And I mean the legislator as well. It doesn't make sense to put objectives that are not reachable or other way around. So yes and no. In a way, I think it's sensible in the way that future-proof or ESG valid, you can call it whatever you want, taxonomy-proof assets are more liquid. So in a way, it is translated into valuation. And I think, the RICS is already working on some guidelines. In the future, it will be implemented in the valuation of assets in a more, let's say, guided way. But nevertheless, we as an investor cannot wait until something happens and then, just say, oh, okay, we need to be prepared to that.
It's a little bit lower, but wait for 30 years.
Yes,
it will cover in
we cannot do that. We cannot do that from a societal point of view. I mean, the operators and the residents need to have comfortable houses. And we cannot do that from an environmental point of view, and we don't want to do that. So we are, since many, many years, and I think it's the same case for my colleague here, preparing ourselves to more environmental friendly assets. We've been doing that since many, many years. And regardless of the legislation, I think it's common sense to admit that there is a problem, regardless of how the Europe is wanting to solve it, and try to do our utmost best to get it in the investment products. And yes and no, because now we sense it in liquidity of products, but in 5 years, and mark my words, in 5 years, 10 years, non-Green Deal proof, non-taxonomy aligned assets will be probably...
But will it be the same for social impact? And I think, Alexander, you wanted to contribute to this one, please?
Yes, I just would like to make one comment on that one. A large Austrian bank.
1 minute, by the way.
A large Austrian bank actually told me they had a green project finance going on. So they financed 500 million of senior living assets in Germany. And then they did their final rating now, and it was only one asset, that's more than 60 that they financed, which actually had ticked the box as a green finance. It was one of those that we acquired. So the question is really, who's taking the cut now? Because the investor actually doesn't want to miss on return. Plus, there's high regulation in terms of coming what's really green. And I think to find the real balance in a super fragmented market is the real, let's say, put it in that way, a real challenge with all the regulation that we have in the market.
And just to add, you cannot only do everything on your asset, obviously, where does your energy come from? How do you know, those are important things as well. And I think we need to be, all of us, very pragmatic and you know, have a lot of common sense in this approach of what is future-proof assets. You know, that's the most important.
But an important topic to tackle. I want to finalize with a big applause for this expert panel. And then I would like to invite on stage first Frédéric Durousseau from Clariane. Start with a little fireside chat, because when it's about the investor appetite, it's very related to the operational side. And you are one of the, I think, global market leaders with Clariane. And when you were, let's say, listening to the panel, what was your key take from an operational point of view?
Also, I think that there is one thing we should never underestimate, is that for us operators, when we earn 100 euro, it comes at 85 are coming from the government, almost. So at least 85 are regulated. So regulation is strong in the sector. Of course, demographic is the long-term view. But there is a very short-term view, which is regulation. It can change very quickly. We saw it, for example, in Germany, when in September 2022, the government decided suddenly to have a big increase of wages for all the professions. So it's very great news, I would say, for the people concerned, and it puts money into the business what we need. But at the same time, the money for the operator comes from the legislator, and this one said, well, we will arrange the care rates, but more next year in 2023. And as you know, it created a wave in Germany, a wave of operators being bankrupt due to the fact that it was not they were not catching the care rates enough quickly, and they have inflation, wages inflation, energy inflation, purchasing inflation due to the Ukraine war. So it was a difficult period. And now we see light at the end of the tunnel due to the fact that we have still problems of inflation. It's still there. But the care rates now the new care rates are way higher than the former care rates. And it helps us and it allows us to have some returns. I heard Nikolai when he was speaking about development and he was speaking about financial equilibrium. Of course, when you look back, what happened in 2022 first, we had an Orpea scandal in France that was, not foreseen. It did hurt the sector. It was more difficult to find financing for the sector. On top of that, we have a hike in interest rates everywhere in the world, so it was also more difficult to finance the sector. Most European countries are also challenging with their public deficits, so it's also one of our challenges. And now we see that all this, which came in 2022, 2023, are now progressively, let's say, disappearing or being a bit more stringent. And it allows us to be a bit more optimistic now than we were 1 year ago.
Yeah, that's very interesting. Maybe also because when I gave my intro, it was also about longevity, and I would like to invite the other speakers on stage. Please have a seat. When it's about longevity, Frédéric, how do you tackle this from Clariane's point of view? Are you developing new types of schemes like senior co-living, or can you very briefly share the latest status on that one?
Yes, we are investing in all the healthcare cycle and on all aspects of senior living cycle. Being able to provide people with one or other solutions. So for example, we are developing in France home care solutions, And we are one of the leaders in home care solutions with the brand Petit-Fils. And Petit-Fils, it means grandsons. And the grandsons are taking care of grandparents. So that's the philosophy behind it. And the view is that when you have care at home, it's very common, in fact, that your mother or your father will see 20 different people in the space of 1 year. And in Petit-Fils, we are guaranteeing that you will see just one caregiver who will take care of you on the long run. So we are also innovative in the way in the solutions we provide to the people staying at home. So that's one solution. We have other solutions which are like co-living systems also developed in France, which are called HGV, and it's co-living for seniors. And why is it important? Because we are focusing where the people really live. In France, we may think that many people live in Paris area, but also most of the people don't live in Paris area. They live in rural areas. And in rural areas, you cannot have senior homes or nursing homes of 100 residents in a small city. It's where HGV comes by making, in fact, co-living solutions in rural areas, limited to 16 people, 2 times 8 people for each home. We can have niche market, which is still profitable, and which is consuming very little public money. And in this case, we think we can develop in many different, well, probably different countries, but at least in many different parts of France.
Yeah, lovely. Yeah, that's also the topic of the second part of the panel, is to share best practices. And I'm very happy also with Thomas and with Scott on board. Welcome, guys.
Thank you.
But let me start with Scott, all the way from the United States of America.
Don't hold it against me.
But well, I'm very delighted that you joined SHHA just before our second summit. Mm-hmm. You were one of the speakers. And when it's about sharing best practices, and especially overseas, I think US is maybe 20 years a little bit of a front runner for Europe. And already Frederick was sharing some best practices in terms of longevity, living at home with home care services. Maybe can you share very briefly what's the evolution in the United States when it's about senior living, older adults, and more specialized healthcare?
And how long do we have?
Yeah, it's an open question. I learned this from Richard Betts. It's like a small question, but then it requires a 5-minute answer.
Well, one of the issues we have in the United States is we have been around for a while. The first communities opened up in the early 80s. So we've got a lot of 20 and 30-year-old properties. So we're trying to figure out what to do with those because they're functionally obsolete. So the residents don't have access to, what everybody else is getting with the newer properties. So, and also within that, the client has changed. It's not the GI generation that we call it anymore. It's the silent generation, the trailing edge silent generation. It's the baby boomers. Gen X is next. But it's a different client now, so we're changing what the client is looking for. Also, the client doesn't necessarily want to be with people their own age. My father passed away last year, and when he had to go to a community, he didn't want to go because of all the old people, but everybody was within 2 years of his age. So, that's a problem worldwide.
But you see more like multi-generational approaches? Or?
I see multi-generational, but intergenerational, I prefer to call it. I think communities would have more interest, related to interests and backgrounds, more affinity kind of communities. People tend to be with people like themselves with the same interests, or with younger people. And whatever a younger person is, if you're 90, somebody in their 70s is younger. So if you're in the 70s, somebody in their 50s is younger. So I think less about age, the future is less about age, more about interests and affinities.
Yeah, and one of your key takeaways at the summit was that it's not about age, but it's about AI. One line was 95% in senior living is about AI. Can you briefly share our Europeans? What about AI? Is it, let's say, controlling our lives within a decade, or is it the game changer? What's the state?
Let's hope it's not controlling our lives. Let's hope we're using it as a tool. And from the operation side of the business to the resident engagement side of the business, AI has the ability to support lifestyle and how we care for people and how we help people engage with life. And I think that's where we have to sort of focus our AI intelligence and usage, because AI it could go the wrong direction, but if we are smart about it, AI can really help. In fact, in 2 weeks I'm going to a conference that's all about AI in senior living. So it's a topic that's talked about constantly, and we're trying to figure it out, honestly.
Yeah, interesting. Well, maybe to you, Thomas, because when it's about consumer
no AI question.
No AI, yeah.
No AI question.
You're the younger generation. You're having a device on your. Yeah. Hey, but let's talk, because I think Octopus Real Estate, you're, let's say, market leader in the UK. You just entered the European markets. Sorry that you're out Europe, but that's a little joke. But when it's about creating different type of products, I'm aware that a lot of seniors, they own a home. And you're also working on, let's say, a different type of rental products, or what's your take on that one? Because I think it needs also a little bit of variety in terms of types of products. Maybe you can elaborate on that one.
Yeah. So we think both for sale and rental products are absolutely valid, both from a consumer perspective and investor perspective. So from a consumer perspective, we think there's certainly a market for both tenures, partly because they tend to attract different age cohorts, right? On the for sale market, you tend to have customers that come in at the age of 75 or to 78, whereas on the rental product, the age tends to be a bit higher in the early 80s. Now, from an investor perspective, I think the rental proposition is very attractive. One, because the orthodoxy of the investment structure, and by that I mean that it's simple. Investors understand rental income. They can easily appraise it. They can easily underwrite it. They can easily value it. And two is the quality and the stickiness of that income. Now, in a senior living rental, once you've gone past the initial let-up period, people tend to stay in those accommodations for, on average, 4 to 5 years. So the churn of tenants compared to other asset classes the investors are very familiar with, such as BTR or student, is far lower and results in sort of very consistent inflation-linked cash flow growth over time. Look, and just for wider context, Octopus, as you point out, is a leading investment manager in a senior living space. We have a strong record in a for sale product. So to date, we've done around 20 schemes, which add up to over £2 billion of real estate GDV, all been for sale. That said, looking ahead, we see senior living rentals as a big strategic opportunity. And so we're currently in the market developing a pan-European or vertically integrated retirement rentals platform, and partnering up with some of the best-in-class developers. And the first milestone we have got to is we signed, which you might have seen, heads of terms with a prominent developer in Spain, being Neinor Homes, to roll out the strategy in the Spanish market.
Does it also include like your integrated retirement community concept? Because we did a webinar on this particular topic, which is quite known in the UK, but unknown in other European markets. Is that also part of that strategy?
Yeah, that's right. I mean, spot on. I guess just for people listening, what is integrated retirement community? That's the term that's sort of coming out from UK. It's a proposition that goes far beyond just the residential real estate. It's not just your apartment. It's extensive communal facilities available for people to go use that facilitate interaction, facilitate people feeling like they're part of the community, engage in physical and mental activities, and ultimately have their best life. So that's right. And look, I can talk endlessly about what the difference of that would be in a for sale versus a rental proposition. We can cover that separately, but ultimately the broad answer is yes. We're looking to create not just the real estate product, but something that kind of creates for the last years of their life, the best years of their life for people.
Yeah, maybe that's also a final one for you, Scott, because it's also about changing the narrative. I think that was Sylvia's one-liner.
Mm-hmm.
That's also in my intro. Because I think, do we also need to create a different language with each other? Because when it's about quality of life, it's not about aging. It's about making a fun of your last 2-3 decades of life. Is that also what your take from the US, that it takes a different mindset, a different type of conversation with stakeholders?
Again, a very broad topic. We talked the language of senior living, and senior living in itself has become a problem.
Are you speaking about senior living in the US, or is it older adults, or what kind of words do you use?
That's one of the big conversations we've been having. Nobody likes senior living. Nobody likes assisted living. Nobody likes any of these terms. Now we don't even like active adult. Because if somebody is an active adult, that means somebody's not an active adult is not active. So lifestyle living, later living, people are trying to figure out what we should call ourselves, because it becomes ageist. It really becomes ageist in many minds. If you say, if I'm going to live in an active adult community, well, if I'm an independent, does that mean I'm not active? And so what am I looking for? It becomes a marketing issue as well. So it's a conversation we've been having, The idea of an integrated retirement community is fantastic, but the problem is it's got that word retirement. And if you look at the definition of retirement, it means to stop. And it's exactly what an IRC is not about. So, when I'm teaching about senior living, and I use the term because we know what we're talking about, we have those conversations about what people that are aging are not stopping. Maybe, when you were in the GI generation, you got your gold watch and you went to the desert and you played golf and that was it. Everything stopped. Well, the boomers aren't stopping. They're going on to second, third, and fourth careers. They're going back to school. They're doing all sorts of different things. And so that creates a different mindset, a different conversation about what aging really is.
But do we also have to rebrand then the SHHA, I'm afraid, differently?
I think you're going to have to think about it.
Yeah. Well, maybe because we have to also finalize this one. What I already mentioned, I think we can talk about this for 2 days. And we will again do the summit in June. But I think it would be nice to have an ongoing conversation about our asset class, because I do believe it's really purpose-driven. And also when I look at the 2 panels, I think those are esteemed professionals with the heart on the right place. And whether it's about senior or aging or longevity, it's all about people. And I think that makes a difference in real estate. So also a big applause for this audience.